The reduction in the corporate tax rate from 35% to 21% was a central pillar of the Tax Cuts and Jobs Act. The intention here was to stimulate investment, encourage job creation, and make U.S. businesses more competitive globally. But we have to ask, did that actually happen across the board?
It sure gave big companies an excuse to scale up operations, that's for sure. I mean, companies like Amazon, they went on a hiring spree, adding thousands of jobs across warehouses, distribution centers, the works. You can't deny the scale of investment it unleashed.
That's a valid point, Duke. Amazon's post-TCJA expansion is a fascinating example. Their 2018 hiring numbers surged, reportedly pushing their U.S. workforce to nearly 400,000 employees at the time. The argument here is that such corporate moves have a ripple effect: employment, increased wages for some, and community investments. But what we need to critically evaluate is whether these benefits extended broadly or remained concentrated within certain sectors.
Sergei, most arguments claiming those benefits didn't reach Main Street overlook one big thing: competitiveness. You think these tech giants and big firms would have stuck around without that rate cut? No chance. They'd have parked their operations overseas quicker than you'd say, tax haven.
Well, that risk certainly played a role in shaping the tax reform. Yet critics counter that the reductions contributed disproportionately to the successes of firms already thriving, such as those in technology and finance, rather than boosting smaller or struggling businesses. They also point out that shareholder dividends and stock buybacks appeared to outpace some of the expected reinvestments in the broader economy.
Stock buybacks. Yeah, that's the star punching bag for everyone opposed to TCJA. I mean, let's be honest, those extra profits had to go somewhere. Reinvest or not, those dollars stayed in the system. They didn't just vaporize.
But Duke, keeping those dollars in the system inevitably connects to the broader discussion: stimulus versus deficit. Estimates show the cuts have contributed significantly to the federal deficit, increasing it by nearly $2 trillion in just a few years. The real issue is whether the long-term economic engagement offsets this spike in national debt.
You're hitting the usual line of attack, Sergei. But deficits? They're a sunk cost of competitiveness, plain and simple. The U.S. isn't going to trail behind global industries like tech just to save treasury numbers. That's short-sighted thinking, my friend.
The question of prioritizing competitiveness over fiscal prudence is an ongoing debate. It's undeniable that industries like tech and finance did benefit disproportionately. The counterpoint, though, is whether the United States can bear the long-term costs without addressing rising income inequality or stabilizing national debt. And this brings us back to examining the broader challenges posed by such sweeping tax reform. Now, as we examine these broader challenges, it's equally important to consider how the individual taxpayer was affected. The TCJA introduced several notable changes, including cutting individual income tax rates across brackets. For instance, the top rate dropped from 39.6% to 37%. While this did lower tax liability for many, the benefits weren't evenly distributed.
Exactly. And it wasn't all cut and dry, Sergei. On one hand, doubling the standard deduction to $12,000 for singles and $24,000 for married folks made life a whole lot simpler for many. But on the other hand, losing personal exemptions, that threw some families off balance, especially, the ones with lots of dependents.
True, Duke. Personal exemptions used to allow taxpayers to deduct set amounts for each dependent, so their elimination pressured larger households. Then there's the SALT deduction cap of $10,000. This hit taxpayers in high-tax states like California and New York quite hard, sparking significant debate. On the flip side, the child tax credit doubled to $2,000, offering some relief to parents.
Sure, and I've seen that firsthand working with veteran families. For folks scraping by on a middle-class income, that extra $2,000 per kid was like, bingo, finally something tangible to ease the load. But man, when they realized the SALT cap meant way less than they'd hoped to deduct, that was a gut punch. A lot of tension there.
It underlines the disparity in how these provisions played out. For middle-income earners, the doubled standard deduction and child tax credit could either soften the blow from the SALT cap or barely make up for it. And some argue that these changes overly simplified the tax code at the expense of nuanced benefit distribution. The ripple effect seems complicated, don't you think?
Complicated is putting it lightly, Sergei. It's like they gave with one hand and took with the other. Sure, flat deductions were great for taxpayers who didn't itemize, but it basically forced folks in specific brackets, especially in those high-tax states, to shoulder a bigger burden.
And so we end up with a fragmented landscape, progress for some, setbacks for others. The question remains, was it worth it for the majority of individual taxpayers, or did the reform's consequences outweigh its benefits? Building on that fragmented landscape we discussed, Duke, one of the broader critiques of the Tax Cuts and Jobs Act is its disproportionate benefits for corporations and high-income earners. For instance, the top 1% saw their after-tax incomes increase by over 3%, while the bottom quintile barely gained less than 1%. It shifts the focus upstream, doesn't it?
Sergei, those numbers sound cold on paper, but look at the outcomes for the economy overall. You're talking about CEO bonuses and buybacks? Sure, they got their slice, but they also invested, expanded, and hired. That contributes just as much to lifting the tide as anything, maybe more.
But does it? Critics would argue that much of these windfalls went towards stock buybacks rather than investments that directly impact the workforce. In 2018 alone, S500 companies spent over $800 billion on buybacks. Meanwhile, the average worker's wages remained relatively stagnant. Anecdotally, CEO pay ratios climbed to nearly 300 times the median worker's salary. It's a stark contrast, wouldn't you say?
It's not all about ratios, Sergei. CEOs are doing what they, get paid to do, maximize profit. You don't fault a quarterback for throwing touchdowns, so why fault CEOs for delivering returns? Besides, stagnant wages, well, that's a broader economy issue. The TCJA isn't your boogeyman here.
Fair point about systemic issues, but let's pivot to the federal deficit. The reduction in tax revenue following the TCJA contributed nearly $2 trillion to the deficit in just a few years. If we continue adding to this burden, where does that leave future taxpayers?
All right, Sergei, riddle me this. Would you rather trail countries like China in competitiveness just to keep a clean balance sheet? Deficits go up, yeah, but you gotta spend money to make money. Those cuts keep businesses and jobs in the U.S. That's not just an expense, it's a strategy.
And the strategy could very well work temporarily, but for long-term growth we need balance. Widening inequality and ballooning debts aren't sustainable. Perhaps adjustments to the TCJA could maintain its competitive edge while addressing disparities and fiscal responsibility.
Adjustments? That's just code for tax hikes, Sergei. And the minute you start raising taxes, well, you know what happens. Jobs disappear, investments dry up. It's a vicious cycle. The law wasn't perfect, sure, but it's doing what it's supposed to. Keep America leading.
And that's the crux of it, Duke, the balance between leadership and equity. The TCJA brought undeniable benefits, but also introduced challenges that require addressing. Whether reforms are undertaken or not, the ripple effects will define economic policy debates for years to come. On that note, we'll leave our listeners with this. The bigger question isn't just what the TCJA achieved, but where it leaves us moving forward. Thank you for joining us today.
Absolutely. And folks, remember, keep your heads up, stay informed, and always look at the bigger picture. That's it for today. See y'all next time.